Good morning, friends. Looking at the world around you and especially on Wall Street, there are a whole host of bullish voices that can be heard. So there are very few bearish voices that remain. Most bears have capitulated by now, and that makes my case for a bearish scenario on Wall Street even more compelling. Firstly, you have the 3:10 yield curve is more inverted than data going back almost 10 years. The ELIs are flashing red. The PMIs are down 17 points on the manufacturing side. That's quite a fall. It shows a tremendous slowdown in economic activity. And stocks are more expensive than even 2022. And at that time of sell-off over there, if you adjust for the level of rates, they are more expensive than that time. Plus, we are already seen a good run-up in stocks since early 2023. So all these things make up for a scenario which is not very conducive to sharp rise from here. However, we have many people still talk of a huge bull market that has just started. I do not agree. Friends, trend is not our friend, and the market is not turning in the direction in which many are anticipating. Do remember that there are 4 important pieces of data that can indicate recession. Most of the macro indicators on my dashboard are currently flashing red. One is that the yield curve is inverted, and the Fed tightening at the long end of the curve shows that the expectations are coming down. Second is that the PMI data shows that there is a great amount of stress, especially on the manufacturing side. 17 points drop on the PMI data is not very good sign. It's a clear sign of economy about to enter into a recession. Thirdly, there have been tremendous amount of emphasis on unemployment claims. Many say that these are a lagging indicator, which they indeed are. However, if you look at the latest data that is now available, the unemployment claims are also picking up in the United States. As a lagging indicator, it is among the last indicators, but it is also now beginning to give up, adding to the macroeconomic indicators, which are, most of them are now flashing red. And a very important indicator that I think you should be considering is the very keenly watched from the Art of Investing group is the Senior Loan Officers Survey in the United States. It shows you the credit conditions, how they are in the US of A. And the most recent survey showed that 46% of the loan officers surveyed are now talking about tightening conditions. 47% of the officers. When was this level last seen? During 4 recessions. The same level seen during last 4 recessions, 2020, 2008, 2001, and 1990. All the years, 4 recessions. So very important piece of data. People tell us that, what is your methodology? These are some of the methodologies. Some of the parameters, these are just a few parameters. We use over 100,000 parameters when we do our analysis as to what's coming next, our timings, our days, dates, months, big days, big months, big crashes. These are the types of indicators we look into. Friends, there's an every indicator that S&P 500 could go below 4,000, below 3,900, I would say. And to get to know more, please do join our Prime or Prime Plus Telegram groups. If you'd like to learn more about the US markets, the global markets, and where we are headed from here, we'll give you a lot of information in detail. And if you'd like to know more about the Indian markets, then please do join Premium Plus, which are good indicators of what's coming next for the Indian markets, for the Nifty and the Bank Nifty. The number to get in touch for all of them is 9820861044. So happy investing and have a great week ahead. Hope you enjoy the investing, and I believe that our macroeconomic indicators are flashing red. Please do not forget to do your own homework as well before you invest your very hard-earned money. That's a prerequisite. And as a disclaimer, I must add that we do not own any puts or any positions, any short positions. Otherwise, it leads to a conflict of interest. Our information analysis is pure, very well safeguarded and according to local rules and regulations of the United States of America and India's SEBI. So we do not dabble in any of the information we give you. This is purely for your use and also for our customers in Premium and Premium Plus for the Indian markets, Prime and Prime Plus for the US markets. This is a disclaimer, and do not hesitate to do your own homework before you invest your hard-earned money. I believe that we are at a very crucial inflection point as far as global stock markets are concerned. Besides, I've not even discussed about the US debt ceiling debate that's going on. Today there is a meeting between Joe Biden and Kevin McCarthy, the Speaker of the Opposition. And they're going to discuss once again the possibilities of striking a deal on on increasing the debt ceiling. Now, as far as the information that is available still now, McCarthy particularly talks about the fact that they have not yet reached anywhere close. Biden is relenting a little bit, talking about spending cuts and things like that. But that's the first time in these negotiations that this is happening. In any event, it's going to be interesting. As far as our analysis goes and our reading of the entire scenario and the picture goes, I don't think that either side is going to relent so easily. This is going to be a very important point and a bone of contention as we near the US presidential elections. At the same time, none of them wants to be shown in a limelight that they contributed to a technical default on the part of the US of A. Therefore, it is quite likely that they may be very, very cautious in trying to strike or not strike a deal. At the same time, they do not want to relent, otherwise they would look like a weaker side. So it's going to be an interesting debate. I believe that there'll be a stalemate and there could be a good rub-off effect on the stock markets. So this is my fifth indicator, all flashing red. I look forward to some drawdown in the markets ahead. Please be very cautious. S&P 500 headed towards 3900 and below. That's in the immediate near future. Happy investing, and don't forget to get in touch with us on 9820861044, and do join our Prime or Prime Plus telegrams, and also do email us at globalmoneyiNvestor@gmail.com. Happy investing. Take care. Have a great day ahead. Take care. Bye-bye.